Cast is now starting. All attendees are in listen-only mode.
Hello, everybody. Thank you for taking the time to meet with us today for this webinar presentation on CW Research's World Oil Well Cement Outlook 2021. We have a forecast until 2026, and we're excited to share some of the highlights of this report with all of you. Next slide, please. So before we start off, I just want to give you a brief idea on the agenda. We'll take a couple of minutes to introduce ourselves, our company, a little bit about the report, and then we will dive into the report and the underlying outlook that we have gathered through our extensive research and primary calls as to how we feel the market will be over the next few years. Next slide, please. So to start off, I would like to introduce myself, Prashant Singh. I'm the Associate Director of CW Group here in CW's Mumbai office. And my partner today is Mr. Wanderson Teixeira. He's based out of our Portugal office, and he's actually the lead analyst on this report. You have our contact details on that page, so please feel free to actually contact us if you have any questions. So let me start off and deep dive into a little bit about our company. So CW actually is present across 3 different verticals. We have the research vertical, we have the advisory vertical, and we have the media vertical. In advisory, we do consulting and management, consulting and strategic advisory projects with major stakeholders, including entities including the World Bank, the IFC, some sovereign wealth funds in the Middle East, and we're actually now working on the advisory side with a major petrochemical company in the Middle East, in terms of helping them establish and set up a petrochemical plant. Within the research umbrella, we have numerous detailed syndicated reports that CW does on various aspects of the cement industry, including the VFR, which is the volume forecast report, which is one of our flagship products. We attached that with the TPR, which is the trade prices report. There's the global, the white cement report. And as a subset, we have specific reports within the cement sector, such as the oil well cement report. In the media umbrella, you have an access to our huge online database. You can subscribe to various newsletters for different topics, ranging from paper and pulp industry to cement to bulk to cement. And we also, prior to, of course, COVID, and now we're re-engaging, we used to conduct industry-specific meetings, which we hope to be doing in person, where we get major stakeholders from different industries to meet and join together and present their views and outlooks on how the industry is going to fare over the next few years. So that encapsulates the brief introduction about our company, and now let's deep dive into the report. So this is the World Oil Well Cement report, and as you see on the link below, you will be able to click on that hyperlink, and it'll take you to a detailed description of the report and all that it provides. Predominantly, what we're looking at is we focus in-depth detail on 33 major markets which drive oil well cement and its consumption. Of course, we look at crude pricing. We look at different aspects such as onshore, offshore, shale, and geothermal well activity. And we also provide a detailed listing of various oil well cement manufacturing facilities for you to get a comprehensive view of the sector. So to start off the discussion, I would like to present a small couple of slides on the macroeconomic picture. Next slide, please. So to start off, 2021 has actually started off mixed in comparison to the expectations we had for 2021 just a few months ago. At the end of December, there was a lot of optimism regarding, global recovery, resurgence across all regions. Now, while some regions have fared better and are continued to expect to strongly throughout the remainder of the year, many regions, especially in South America and in Asia, have actually suffered a hiccup with a resurgence of a third wave or a second wave of coronavirus cases, especially like in Southeast Asia, as we're witnessing in India, even though now the wave is tapering off after 2 brutal months of extremely high cases. This is bound to have a long-term impact on growth prospects. So at the start of the year, or actually as early as April, the IMF was projecting, major economies to grow at 6.7% globally, and to expect the world to do emerging Asia to do at 6.7% growth, whereas World Bank, which has just recently come out and its June forecast, expects the world economy to grow at 5.4, a slightly more conservative outlook than the world IMF. It also just came out with a new number for India based on the impact of the COVID cases that have been affecting this country for 2 months. And now the World Bank estimates that India will still grow at 8.3% in comparison to almost 12% that the IMF had estimated in its April forecast. But obviously that was prior to the wave actually starting. So you can see that there is wide disparity and still considerable uncertainty about the rates of economic growth. And this is primarily fueled by the lack of available vaccination programs and vaccines throughout most of the developing world. Most of Europe and North America seems to have sufficient supplies, but still there is room for caution as vaccination rates have actually plummeted in the United States after a strong pickup. So there's still some concern as to continued vaccination rates need to be upheld throughout all communities so that global growth is equitable. And I think that what the first half of 21 has shown us is that this growth is probably going to be prolonged into 2022 rather than the whole resurgence being witnessed in 2021. Next slide, please. So I'm just going to start and introduce the first market overview slide, and then I will, have my colleague Anderson, who is going to discuss the rest. So next. So as you see, 2020 witnessed a dramatic decline in prices. In early March 2020, futures of crude oil reached negative for the first time in anybody's collective memory. However, things have since then significantly ameliorated. Prices have risen and have continued to strengthen between $60 to $70, although there is concern that any larger scale increase in prices will have a negative impact on global growth. On the flip side, we have news that Iran and the United States may reach a new deal, which would then allow some volume of Iranian crude oil to come onto the world markets, which could help sort of depress prices. So this crude oil price is going to be an important metric to follow as we track geopolitical trends to see how they're going to pan out. But most international organizations forecast crude oil prices between now and the end of the forecast period in 2026 to range between $60 to $75 for a continued growth and recovery. Now, of course, crude oil prices at these levels are beneficial to some countries in OPEC and not enough for others. Countries like Saudi Arabia, which have very low production costs, can virtually sustain and survive at any cost. Whereas countries like Algeria and Iraq, which rely significantly on oil revenues, require a significantly higher oil price. So it will be interesting to see how this dynamic pans out over the next few weeks, months, and even the next few years. So I would now like to leave you in the good hands of my colleague Vanderson, who will take you through the remaining slides. Thank you, everybody.
Thank you, Prashant. Hello, everyone. I'm going to start presenting the total drilling distance for this year. The total drill distance is expected to increase by 13% from approximately 126 millimeters in 2020 to an estimated 141 millimeters in 2021. Offshore drilling distance is also said to have one of the highest increase on a yearly basis, increasing by an estimated 16%, followed by onshore and shale drilling distance, which are expected to increase by 13 and 11%, respectively, in the same period. While the average depth onshore and offshore remained relatively stable in the last couple of years, the average depth shale witnessed a deep decline, which is mostly a result of the decrease in North America's shale production, especially in the United States. Now, to give you an overview of the global well count, we can see that we witnessed a decline of around 17% in 2020. This is due to the COVID pandemic, which affected highly almost all of the economies. However, new well drilling is likely to increase on a yearly basis by more than 12% globally to reach around 76,000 wells in 2021. North America is expected to be the main driver for this global well count growth, since it's set to account for almost 80% of the global well drilling activity this year. We expect this region to increase by almost 12% year on year this year. Another region that is also likely to see an improvement in number of wells is the SEAS region, which is set to significantly improve their well count by around 10% on a yearly basis. However, in spite of this increase, their well counts over the past 10 years has been always registering a range of 5 to 6,000 wells, which is basically a lower count considering the other regions. Added to this, we also estimate that a considerate amount of rigs that are currently offline and are prepared to go online at any moment's notice. Several operators are ready to take advantage of an oil supply crash and tensions with China and the Middle East. They could possibly result in a decline of world oil supply. In rig operators, mainly in the United States, would be ready to capitalize on this scenario. In this next slide, we turn to oil well cement consumption. And here we have a breakup by type of well and what we expect to happen this year. While onshore and shale oil well cement consumption is expected to see CAGRs increase of 9 and almost 1% in 2016 to 2021 period, respectively, offshore consumption is expected to see a decline of around 6% in the same period. Onshore consumption continues to account for the largest share of the total consumption, representing today an estimated 70% of the total consumption, remaining largely stable when you compare to last year, when it suffered a decline of around 15% year on year. Geothermal oil well cement consumption, on the other hand, accounts for a very, very small percentage of the total consumption, representing only close to 0.5%. Therefore, this type of well, geothermal, demand is expected to see a minor increase at a CAGR of 0.4% from 2016 to 2021. Now, moving on to oil well cement consumption by region, we see that consumption reached its peak in 2014 at around 10.8 million tons. With the oil prices slump in 2016, this resulted in a sharp reduction of oil well consumption, which reached its decade low at 4.1 million tons. North America has been the largest consumer of oil well, accounting for more than 60% of the global market in 2016. Demand since then has increased in this region, making the region account for more than 70% of the global demand in 2021. The second largest market in terms of demand is the SEAS region, which consumed around 0.6 million tons of oil well cement per year from 2011 to 2016. However, in the last 5 years, demand has witnessed a minor increase compared to the other 5 previous years, and this is mostly due to Russia's consumption growth during this period. When we talk about oil well cement exports, we see the global oil well cement exports that before the oil price crash that happened in 2016, they were stable. But since then, exports have been declining drastically. And added to this, with the pandemic that came into 2020, this led to a new oil price collapse, which resulted in a significant decline in oil well cement demand. Consequently, resulting in decline in exports. For this year, it is expected that with the global economy emerging from the gloom of 2020 and the oil prices witnessing a recovery, demand will also grow therefore positively affecting exports. Mexico, the leading oil well cement exporting country, is expected to see an increase in its exports in 2021, with the US remaining its largest consumer. Other important exporting markets like Germany and Canada are also expected to see an increase in its exports, while China and Iran are set to see a minor decline in exports this year. Moving on to price trends, we expect that with the exception of Russia, Brazil, and the US, premium for oil well cement prices is still expected to register lower levels in 2021 than in most markets in 2016. Since oil well cement has been traditionally a premium product comparing to Portland cement, prices decline have been a little bit smaller than what we see in OPC. Prices in the US, they fell by around 10% between 2011 and 2016, but this year they're expected to see a recovery and to reach more than $110 per ton. Now, jumping into our market outlook, the CW research provides two additional scenarios, excluding the base scenario on which this report is based. Therefore, we have a conservative and an optimistic scenario that complement our traditional output. In this slide, we can see those scenarios in terms of drilling activity, and we estimate in our base scenario a nearly increase of almost 10%. This is based not only on a recovery of the crude prices, but also based on economic growth, which both likely will boost demand for cementitious products. In our negative scenario, new well drilling activity is estimated to see a smaller increase of around 7%, while in our optimistic scenario, we estimate a recovery of more than 15%. In terms of drilling distance, we also provide two additional scenarios. Over the 2021 and 2026 period, in our base scenario, we estimate that the global drill distance will grow at a CAGR of more than 5%. The total drill distance for North America is forecast to increase at a CAGR of more than 5% as well. This is due to shale drilling in the region, while drilling in the CIS region, which had a peak in 2013, is expected to see a rise in countries excluding Russia as they invest in and as they increase their investments. Kazakhstan is one of the examples that is set to see a modest increase anchored by additional development drilling at their Tenzing field. According to CW's estimate, an increase in shale drilling is also expected to be seen in the over medium term, while in our two other scenarios, the optimistic and in the negative, we expect an increase in drill distance at around 7 and 4% respectively. Now, when we look at oil well cement consumption and its additives, we estimate in 2021 oil well cement consumption growth to not fully trend in line with the increase in well drilling activity. This is due to some drilling companies, mainly in North Africa, who preferably use ordinary Portland cement instead of oil well cement. Of course, after bottoming out in 2016 at almost 4 million tons, the oil well cement demand is expected to improve at a CAGR of 6% between 2021 and 2026. However, this improvement will still remain far from the peak that we had in demand in 2014 at 10.8 million tons. In terms of extender volumes, we expect to stay in a range of 20% of the total cementitious demand in the forecast period and increase at a CAGR of around 8%. In the forecast period, when we look at oil well cement consumption by type of well, we see that onshore consumption is estimated to continue to account for the majority of oil well cement consumption globally, representing an estimated 60% of the total consumption. Offshore and shale consumptions are expected to see an increase, therefore also increase its share in the total consumption by 2026. Offshore consumption is expected to regain a momentum, seeing an increase at a CAGR of almost 6%, while geothermal, on the other hand, is estimated to remain flat in the same period. In terms of regional consumption, globally, we see the markets that have suffered a decline in oil well cement consumption, they are expected to see a recovery in the forecast period based upon the oil prices rise. North America is expected to continue to dominate global consumption in the next 5 years, accounting for almost 80% of the total consumption by 2026. Asia Pacific is one of the regions that is expected to see the biggest increase in terms of consumption, having a growth at a CAGR of almost 8% from 2021 to 2026. Key countries like Saudi Arabia and Iran are expected to see a large oil well cement consumption average growth rate from 2021 to 2026, with that being up by more than 15 and 10% respectively. We also predict huge shale well explorations in Argentina and Saudi Arabia to be the key drivers of the oil well consumption in the next 5 years, while Venezuela, since it has been focusing in recovering wells and not drilling new ones, is expected to have little or no investments made in oil well, mostly because oil prices are still not very attractive. Now, I would like to leave you with our closing remarks. An economic recovery remains dependent on the successful implementation of the vaccines and the reforms in the next couple of years. In terms of oil prices, they are expected to see an increase in 2021 as the economies start to recover. Global well count is estimated to increase by more than 15% from 2016 to 2021 as the economies regain momentum, which will likely boost oil demand. And our global oil well cement demand is expected to see an increase of double digits in 2021. This is after a deep contraction last year, which was caused mainly by the pandemic. And in the next 5 years, demand is expected to continue to see a robust growth of almost 5% on a yearly basis. Now, in terms of pricing, the premium oil well cement prices, they are expected to still register lower levels this year in most markets in comparison with 2016. Now, I would like to thank you for your time and attention, and I'll see you in our next webinar.